Hey guys, how's it going? So in today's video, we're going to be talking about a stock market crash in the next 3 months. Uh, that's what I believe anyways. I'm going to show you guys proof in this video, so let's begin. So I just want to tell you that I'm sick, but I'm still making a video anyways. It's funny how I got sick because, the whole for the whole year, for last year when I wasn't working, when I had the whole year off, I wasn't sick the entire year. But as soon as I came back to work, a month later, a couple months later, I don't know how long I've been working for now, but I got sick after I worked. I think it's partly because of the customers talking to me and getting me sick, the spread of disease and germs and whatever. So that's what I think happened, and that's the reason why I'm sick. And it sucks being sick, but it happens. And yeah, I'm sick right now. Maybe you guys can tell it in my voice. Maybe you can't. I don't know for sure. But I've been sick for a few days now, and hopefully it recovers. But it really sucks being sick. But anyways, yeah, I believe that we're gonna have a stock market crash in the month of June, July, and August, and in the September, October, the stock market will recover. At least this is what I believe. So why do I believe the stock market crash? If you look at SPY is the best indicator for a stock market crash. If you look, back in October, the MACD, the 50-day moving average and the MACD line crossed, and what happened? The stock traded all the way down to, $234. Trump says buy the dip. I didn't listen to him, and the stock recovered. But if I did buy the dip right here, I would have made a ton of money. If I just listened to Donald Trump and bought the dip, I would have made a huge amount of profit, but I didn't. But there's opportunity coming soon. At least this is what I believe. Another example is Apple. Apple, the MACD, and also the MACD too. If you look at the MACD, the last time it fell below the support was back in October, and it continued to trade. Right now it's below the support line again. So I believe that it's going to continue to be very volatile, and I'm thinking in the month of June, July, and August, we're going to have a very volatile market to the downside. At least this is what I believe. And if we look at Apple too, Apple is, the 50-day moving average and the middle of the Bollinger Band has crossed, and the stock is, falling. And then if you also look at the MACD too, the last time we had a crash, it crossed that support line, and then the stock went all the way down. So I believe that it just crossed the support line again. So I'm thinking that the stock is going to go lower to maybe the 140s. At least is what I believe. Amazon, the same thing. Amazon is the MACD is starting to cross the support line. So I believe that in the month of, I believe that within 3 months, we're going to have a similar pattern again. Bank of America, another, big company, a big bank. I wanted to include a bank in here. The MACD, the 50-day moving average, and the Bollinger Band is crossing, and we could see potentially $22 US very soon here. The last time it crossed the line right here was, then the stock just kind of tanked. So I think it's a possibility we could tank again. So hopefully it does. Definitely be playing the short-term end of the market. I'll be doing put options. So yeah, that's my plan moving forward. I'm gonna put the market when it I'm gonna sell the dip basically. I'm going to buy put options every time the stock market rallies a little bit. That's my plan moving forward. The inverted yield curve deserves better. So, and then on top of that, the yield curve inverted. So, but I don't believe we will have a big stock market crash. I think we're just going to have a correction again. That's why I believe, because Donald Trump's going to come in and he's going to say, buy the dip, just like he did in December 25th, 2018. He came on, he said, buy the dip. He got central banks to buy the dip. I didn't believe that, I didn't believe Donald Trump, so I didn't buy the dip. I was an idiot. If I bought the dip, I would have had so much more money, but I had a bearish mind, and I was stubborn, and I was like, oh, the stock market will crash. This is nothing more than a bounce, but it wasn't more than a bounce. It was a rally. It was a nice rally, and I could have made a ton of money if I only put my money back into the market. So my next wait is, I'm thinking that, the market's going to continue to sell off. And then if the market ever goes back to, like, the SPY ever goes back to around $234, Donald Trump's going to come on and he's going to say, buy the dip. And the federal government's going to cut interest rate by 1% or 0.5%. And the market's going to rally again. So that's why I think we're gonna have a bear market for the next 3 months. Donald Trump's gonna come on. He's gonna say buy the dip, and this is just me speculating. So I don't know for sure if that's gonna happen, but I know Donald Trump is a cheerleader for the stock market, and he's gonna do whatever he can to prevent the market from crashing, because he believes that the stock market is his way to becoming the president for the next 4 years. So that's what I think is going to happen in the month of probably September, October, and November. And then in December, we might have, some selling. But that's what I believe. I don't know. I'm not a financial advisor. This guy's very smart. I listen to his videos all the time. He says that he's short the market. Back when Donald Trump said buy the dip, he said he was long the markets, and he's been correct. He's making a lot of money. I'm gonna let him explain why he thinks that we're in the early stages of recession. Markets down 5th straight week. So I'm gonna play his video and let him talk about it. This is kind of like a shout out and kind of extending my time a little bit. So let's begin.
What's up, everybody? Welcome aboard to Bubba's Bottom Line, this Memorial Day weekend edition. And make sure you say thank you to a veteran, somebody from their family, a policeman, a fireman, first responders, because without them, I couldn't do what I do and we wouldn't be free. Okay, so make sure you take the time to thank them, but you should think that we should always be thinking of them and thanking them. In the meantime, veterans, their families, I thank you, I salute you, and I appreciate you allowing me to do what I do. Okay. In the meantime, what's up, everybody? And here we are with another week, a down week for the Dow. And of course, I said this a couple weeks ago. I believe we're in the very early stages of recession. Of course, we know the economists will not tell us that we're in an early stage of recession. We know that they will continue to wait until it's too late to decide that we are indeed in that recession. And my simple point is that we can't wait to know. I'm telling you now that it looks like there's a lot of things that indicate that there's troubles are brewing. All right. Again, you can look at anything you want. You can look at any of the metrics you want, the Phillips curve, whatever the heck they look at. Okay, they're ridiculous inflation targets. That doesn't count food and energy because they're too volatile. But it's amazing that prices never go down fast enough. But again, just looking at the things that I would look at, okay, and looking at the people around my life, around my neighborhood, okay, and around what's going on, it doesn't look as good as it looked before. Yes, the economy is still humming along from that standpoint, but it looks like we're coming to a bridge in the road, and as usual, I think there'll be a little bit of a problem. And again, we've had a monster run, and everything's been great, so we'll see. Again, I don't want to be right, but typically things happen, and they change. And of course, between the political ridiculousness, the political clowns on both sides. Again, I'm not picking on any one side, but in this case, the left happens to be a little bit more of a clown than anybody else. with the way that they're handling everything and the way that they refuse to do business, and yet they want to keep investigating the investigate. It'll be very interesting to see how if they get into the reports and they get into some of these other things, and who's really at fault and how far up the food chain, okay, the action goes. Okay, does it go all the way to President Obama? Okay, again, I know nothing about it. I only know what I see, what I read, and of course, interestingly enough, okay, we're seeing more of the deep state, right? So we'll see how it plays out. Again, it's really a joke, and of course, the federal government in general is a joke, along with the rest of it, because of course it's way too big, and it doesn't do what it's supposed to do, and all it does is really piss away our money. Okay, so we'll move on from there. In the meantime, interesting enough, another sign of issues. Negative rates are hitting the mortgage-backed market, okay? Which obviously mortgage rates are very low, but that's a little bit of a scary thing here. Again, when you start to see people settling for very small yields on junk bonds, and you see people selling for very small yields on other products that are typically higher yield, that's a problem. Again, nobody announces the problem. The markets don't announce themselves. Recessions don't announce themselves. You have to take the actual metrics of, common sense, which we know the Fed doesn't have any of that, so they could never say that. But you have to take some direct common sense to understand what may be happening here. Okay. In the meantime, you're seeing one of the only reasons that the market is continuing to rally is more responsible from the stock buybacks than it is anything else. Okay. Again, I don't say it's a bad thing or a good thing. Okay, but the stock buybacks have left the markets buoyed here because, again, if you're a company, you're paying out a 3% dividend and you can borrow money at 2%, doesn't it make sense to borrow the money at 2% and pay back at 2% instead of taking the money out of the company and giving 3%? Again, I'm just saying, right? I don't know, just a question, right? But again, they're generating so much cash that they are able to, because again, for them, they have all the capital they need, so they continue to buy back stock. And again, I don't have a problem with it, but that is one of the reasons we're seeing propel. Volume is pathetic still, okay? And of course, to me, as I've said for the last couple of weeks, this looks like a retailer's rally, okay, whenever it rallies. But in the meantime, we're headed down lower. We've been breaking some key levels across the board, so we'll talk about that when we get into the actual markets. But again, the negative interest rates and the low paying yield on some of the higher yielding products, that's always a concern when people are looking for new places to chase yield and they're willing to settle for less than the asset should be trading for or less than it is worth. Okay, so again, I'm just saying. Okay, so we had a big, it was last week was the tariffs, the no tariffs, the trade wars, the no trade wars, the Cold War, this war. Look, I personally, again, I'm not an economist. I don't try to play one on TV. I just give my opinion. Okay, but I don't see that big a deal with the trade wars or the tariffs. Okay, I understand what they keep saying. How much is it going to cost? And it's going to raise the price of all our things in America. And of course, Walmart's going to struggle. You know what I've seen, and I've used this analogy many times before here and other places, but they'll get their prices up and they'll probably over raise them, blaming the tariffs because they have somebody to blame. They're not trying to make more profit. They're trying to blame somebody. So, we got the tariffs, so we got to get the prices higher. So let's blame that. Okay. And then when we do settle, the prices will never come down again. Okay. This is the only commodity that almost really trades fairly is oil. Okay. Because the minute prices go up, they raise them at the pump, right? Okay. Now they make extra money on the stuff that they have in the ground already that's in their pump. But in the meantime, they do come down, but they never come down quite far enough to match where the price of oil is trading. But at least it does fluctuate up and down, where prices at the grocery store don't come down. Okay, prices at Starbucks don't come down. So again, I'm sure at Walmart they won't come down. And again, if you go back and look at the first oil crisis, where Exxon was, oh my God, the world is coming around, OPEC is going up, blah blah. In the meantime, they had record profits, and I would expect this time to be no different, because I'm a big believer is that this time is never different. And John Deere is already complaining where they're going to make money from and how they're going to get out. Well, again, I'm not saying it's a good thing. I'm just saying that somehow it'll be figured out, and somehow all the stuff will produced will be sold. You know, there isn't that many producers of their equipment, okay? And so I think that things will work out just fine when it gets all said and done. I mean, after all, we still are the #1 economy in the world, and we still are, the biggest. So we still have enough power to get through. Again, my opinion, that's the way I see it. But again, these buybacks and what's going on and the tariffs, I mean, again, does it make a difference? I don't think so. I think that, again, for the overall economy, I don't see what they're saying. And again, I could be wrong, but, I think that we survived before, and I think we can survive now. And again, it'll just force free markets to bring prices down here. And of course, I think now labor costs are cheaper than they were. So a lot of reasons to believe that it will work out, but if it doesn't, it's not going to be that big of a crisis. Okay. That's the way I see it. Now again, I could be 100% wrong, but I'm just saying that's what I see. Okay. The bond traders, the option traders are pricing in a rate cut. So they're gambling on a potential rate cut. Now again, can there be a rate cut? Listen, the Fed can do whatever they want, right? I mean, and certainly the president would like to see a rate cut, because every president who comes into office, whether they be Democratic or Republican, want a rate cut because they want to keep stimulating the economy, borrowing money, okay, letting the banks continue to sell. It's a great deal when you're a bank and you can lend out at 10-1, okay, what you have in reserve. And I still would like to say, in my opinion, that the banks are in trouble and don't have enough in reserve, okay, for what they're lending out. But let's say that they do. I mean, I think the stress tests are a bunch of crap. But anyways, wouldn't you like to lend out $10 for every $1 you own? Okay, collect interest on that $10, so you're collecting on $10 versus $1, number one. And then if you go out of business, if you go bust, the Fed comes in and says, okay, well, we'll print some money for you to make sure that you stay liquid. I mean, it's not a bad deal, right? I mean,
Okay, I'm gonna cut it off there. If you guys want to watch the rest of his video, you can go to his show, I guess, the Bubba Show. I've been subscribed to him for a while. I've been listening to him. He seems like a smart person. He seems like he knows what he's talking about. And he's been correct on the market pretty much a lot. So, just giving you some recommendations. Anyways, thanks for watching, guys. I hope you enjoyed this content. Give me a thumbs up. It helps my channel grow. Subscribe for future updates, and have a great day. Bye.